Good evening, everyone. My name is Scott Lurie with F Street, and I am so excited to be here with you this evening to discuss our final look for F Street OCLV MF3, which is our second phase of a beautiful multifamily development on the great shores of Lake Michigan. We started this development several years ago. We have already had a proof of concept. We have already had 100% occupancy in the existing building, and we're already cash flowing. And we're going to tell you a little bit more about MF3, and I'm really excited to be here with you today. A little bit about F Street. F Street is an alternative investment firm. We focus on alternative investments, specifically in the real estate industry. So when we think about alternative investments, sometimes that word gets misconceived or misunderstood. It simply means alternatives to the traditional bond and stock or bond and equity markets that you're probably traditionally understanding. We plant money trees. I love this. We plant money trees. We're bullish. We plant money trees, which is a saying that my mom and I created way back in the day. I always wondered where the money came from, and my mom always said, "Out back, go look at the money trees," and still am humored by it every single day. So we talk a little bit about alternative investments. I mentioned we focus on real estate. We focus in three categories. We focus in the multifamily category, we focus in the industrial category, and we also have a private credit, private debt fund where we will talk a little bit more about that today. That is one of our evergreens that's been around since 2009. But we cover the spectrum of these three verticals, and we do a very good job in all three of them. A little bit about our team. We have a small but mighty team. Our team has been able to add really great human capital over the past several years. I hope you've had a chance to speak with some of our team. They're always available. They're engaging. They're intelligent. They understand our business. They're happy to convey all of that to you. Please feel free to reach out to myself or anyone on our team if you have any questions about this investment or any investment that we're doing. A little bit about our portfolio. As I said, we buy and build. We buy multifamily. We build multifamily. As you can see, here's a little bit of our portfolio that covers southeastern Wisconsin as well as the United States. We're going to talk about Oak Creek, so we're going to talk about Coast. This is 199 units. This is already 95 plus occupied and doing great. The townhomes are just coming online. We're completed here. We've just received occupancy, and we're doing really well on the lease up. It's a beautiful overall development, and we'll get more into that. We've got other stuff in Brown Deer, Wisconsin, Sheboygan Falls, and then all over the country. Our industrial portfolio, once again, we buy and build. So we have built several million square feet of industrial. We focus in southeastern Wisconsin or the greater Midwest regions where we build. And we buy assets throughout the country where the thresholds and opportunity for return on investment and yield to our investors is present. We will make acquisitions. Granger, as you can see here, was our most recent acquisition in December. And these are our other portfolio assets that continue to be part of our cash flow as we move forward in 2025. Development overview, we've got 1,392 units currently in our portfolio, almost $230 million of value. Our industrial is pushing 2.5 million square feet of Class A, most of it's Class A industrial at almost $200 million in value. And we do have some commercial, small portion of our portfolio of 14,000 square feet at about $32 million of value. So we talk about Lakeshore Commons. Many of you may or may not know, many of you might be investors as an MF1 or MF2 or North Townhomes or other investments inside of Lakeshore Commons. Lakeshore Commons is a master plan development, sits on 66 acres on the shores of Lake Michigan. It is an unbelievable asset. The overall development started first with the city's vision of taking back the shores of Lake Michigan. And then they built a beautiful park called Lake Vista Park, which abuts our property and is part of an amenity for our Lakeshore Commons assets. So what happened, right? Revitalization of the Oak Creek lakefront. So Lakeshore Commons has been involved and envisioned by 2 mayors ago in Oak Creek to take back the shores of Lake Michigan and make them amenities for the community. In addition to the park, which was Lake Vista Park, the city has contributed material dollars, which we'll talk about by way of a TIF, tax increment financing package, which allows us to do unbelievable things in their community. And the overall winner is the community, as well as investors such as yourself who invest in their communities. So proven development, thoughtful design. Coast. So when we envisioned Lakeshore Commons, we said we have to have all types of homes. We can't just have a bunch of apartments. So we've created a bunch of apartments. We've created single family homes. We've created townhomes. And then the city has chosen to elevate the infrastructure by way of their TIF, which has brand new roadways and sidewalks and lighting and egresses in and out. And all of that has made this development at Lakeshore Commons incredibly meaningful, not only for us as the developer, something that F Street and our entire team are very proud of, but the community, the constituents, the people that visit the parks are really proud of Lakeshore Commons and all that it has become. And it is and continues to be a great success. So here it is. We're gonna show you a quick video of a drone footage of Lakeshore Commons, but this is Lakeshore Commons as it sits today. And Peter's working on in the background. We're gonna put up this quick drone video. It's important that you see this to get an idea of what Lakeshore Commons is. So we'll let this run. As you can see, we're now moving in from the east. We're traveling westbound, and you can see where these cars are parked here off to your right. This is Lake Vista Park. And as you see, the first three homes that are situated here, one of those is our architect partner, are occupied. This is another view. This is Coast, the apartment complex, which is 199 units, which is what you're seeing right now. This is Class A multifamily. And you can see it was focused and designed with the vision of seeing Lake Michigan wherever you are. These are the townhomes. These are the for sale townhomes. Townhomes are available for sale. We're selling 4 of them this month. So velocity continues to pick up. I was speaking with a lady yesterday who moved in, who happens to do some work with us, and she said, oh man, Lakeshore Commons is amazing. You can see the amenities, Class A amenities. You have a pool. Off to the right here is the Health and Wellness Center, and then directly down the center is the shores of Lake Michigan. Overall, once again, the touch, the feel, the amenities, the overall aura of this is Class A. And our team has done a great job keeping occupancy very high. This is a clubhouse view. Clubhouse amenities are very important in today's multifamily, and we continue to over deliver as it comes to amenities, and that keeps tenancy very high. Here's a couple more visuals from the outdoor patio with fire pits and the beautiful pool amenity that, believe it or not, gets used all the time. And here's our beautiful gym that does get used as well, yoga studio and stretching facility, as well as a place to watch sports. This is a view from one of the apartments that directly overlooks what is Lake Vista Park and then the beautiful shores of Lake Michigan. Class A finishes and overall balconies that are amazing. Thank you, Peter. So while Peter switches back and we're going to jump out of the drone video, we're going to get back to our presentation. I forgot to mention this in the beginning, but if anybody has any questions or would like to have any points of discussion, please feel free to type those in the chat. We'd love to hear from you, and you're always available to ask questions, and I'll answer them to the best of my abilities as we speak. Are there any OC site tours, meaning you'd like to go see the site? You're welcome anytime. If I can't be there or one of our partners can't be there, there's our property management team. We can absolutely arrange for you to see the site on Friday. Just shoot me an email, scott@fstreet.com, or reach out to someone on our team, and we'll make sure, Theo, you can get on site. You can also drive the site. It's open. It's available. You can drive it right after this video, after this webinar. So the question is, can you change on the offering memorandum changes? I'm going to go through all of that in a few slides. So yes, I will go through all of that. If after I'm done with that, I haven't answered your question, let's get into the specifics of your question. Thank you for asking that. So F Street OCLV MF2, this started construction. We have already gone vertical. This was a big day for us. We went vertical, as you can see right here. So we're making really great progress. If you go out there and see this today, this is what it looks like today. These are current pictures. We are building. We did have to lay a foundation and underground parking. Now we're going on top of that. So we are vertical. We are on schedule. And we are on budget already, and we will stay that way. So great progress here at MF2, which is great. So the next phase, as we approach Summit, it's a seamless transition, obviously from MF2 to MF3. They're right next to each other. They're basically, you'll see the land. If you drive out there, you'll see where MF2 is, where it's being built, and then you'll look directly to the north, and you'll see where MF3 is going. It's all a devised plan. It's all driven by investor demand and, more importantly, tenant demand. We are doing incredibly well with occupancy, 95 plus. We have already distributed cash flow from Coast. The townhomes are filling up incredibly fast, and the overall aura when you get there is a very nice overall master plan community that is screaming, come live here. And it's a dog-friendly community. There's a lot of pets, and there's a lot of really great things happening. So I encourage you, if you're local, to go check it out. So final look, we talk about it. OCLV MF3, these are just sequential limited liability companies that are special purpose entities for the purpose of investing only in this apartment complex. Some people have invested in Coast, MF1. Some people have invested in Summit, MF2. Some people are investing in MF3. So Summit Apartments, F Street OCLV MF3, phase 2 of the Summit Apartments in Oak Creek will feature 57 market rate apartments that will basically mirror and attach into MF2 with strong demands. We've got premium amenities. Our desires and abilities is to get a refinance done once post-stabilized and to get ongoing cash flow back to our investors. We also contemplate every single time taxes. So we do a cost segregation study. In this case, it's called a 179D, which is done as a cost segregation study for new construction. And it'll mirror into the same transition from Stevens Construction, finishing MF2 and starting MF3. So we talk about timelines. Here we are. We're closing our funding round here in the next month or two. We plan and intend to start construction in the next 60 days. So we use these benchmarks, and everyone says, well, it's March already. Yes, we're going to start construction here in the next, call it 4 to 6 weeks, some point before the end of April. We should have construction commencing. We already have a lender in place. We will plan to pre-lease Q1. Construction will be completed in Q2, and we plan to refinance that building 1 year after all of that and start distributions back to our investors. So we talk about structure. Let me go through the structure with everyone so everyone understands it. Your money comes in and it earns an 8% preferred return. So what is an 8% preferred return? It simply sits in a waterfall and it gives you, while your money's outstanding, your money's earning money. It's earning a preferred return. We always either accrue or pay, but we always get paid the preferred return prior to anything else. So this happens first. This happens first. Then 100% of the free cash flow after that is paid back to the Class A investors. Then, and only after this has happened, so 1 plus 2, right? 1, 2 happens. Once 1 and 2 happens, once you have all of your money plus your preferred return, then we start distributing where the investors are Class A, get 65% of the cash flow, and the sale and refinance proceeds, and 35% stays with the Class B, which is F Street. So to make it broken down a little bit further, I participate only after you've received all of your money back and your preferred return. I'm incentivized by way of our profits interest to get you your money back as fast as possible, as well as get you your preferred return. So people always ask me this, it's like, hey, why is this your strategy? And this is because when I started in the business, I always had to get people their money back before they could invest in another deal. So I was always eager to get people their money back. Once I got them their money back, they always said, oh, that was a great investment. I'll do it again. And 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 those people ended up with 10, 15, 20, 30 investments with F Street. So as you think about it, when you make an investment, a simple question back to yourself is, how do I get my money back? You get all of your money back before I participate. So I'm looking to drive revenue. I'm looking to increase profits. I'm looking to refinance as fast as I can. Because when I do that, I'm getting you your money back, which gets me to my interest in getting some of the cash flow. So it becomes a win-win. You always want to understand, in my opinion, how you get your money back. If you put $100,000 in, you own, per $100,000 owns 1.02% of the equity in OCLV. You own that forever. You never lose that. You get a preferred return. Completion happens in Q2 of 2026, and refinance happens in 27. Excuse me, refinance happens in Q2 of 2026, and the cash flow ongoing into 2027. So every month we distribute, you get paid. You have no money in the deal. You have 100% of your money back plus your preferred return. So what can you do with the money that I've given you back? Invest in MF4, invest in another opportunity. Keep planting money trees. This is a money tree. Can you guys see the tree? I don't know if you can see it. I'm not a good drawer, but this is the money tree right here. You put in your $100,000, and this money tree is growing. Every time it grows because I'm giving you your money back. Then take that money and plant another money tree right over here. And imagine if you planted 10 money trees with the same $100,000. You would be wealthy and have no taxes to pay. So let's talk about the projected results. We project the results to be a 17.91% projected IRR based on a 4-year hold. We project the average cash on cash return while you are invested is 8.62 based on a post refinance in year 3 or 4, and an equity multiplier of 1.87. If you put in $100,000, in 4 years, you should get back $187,000. Pretty simple math. That's what an equity multiplier is. Pretty good return. So we talk about taxes and other incentives for Summit Apartments. We have an approved TIF, a tax increment financing incentive, with the city of Oak Creek for the apartment complex, totaling $3.9 million over 19 years. This makes your return better. This is how we get your return to equal the numbers I just showed you on the previous slide, but this is an important piece of it. All of the money we get back goes back to our investors. All of this TIF benefits the investors and their returns. We work with the city and the municipality, and specifically here in Oak Creek, Wisconsin, to get this incentive to improve your returns. So who are our partners? Well, we've got the same partners that we have here as we've had in all of the other phases. So this one is being built by Stevens Construction. Harmonic Residential does our leasing and our management. Rink is our designer. Kapoor is our civil partners, and First American is the title company. We work with just the best. These guys are our top dogs and top producers, and they understand time is money, budget's important, stay on time. So here's what it's going to look like. Here's beautiful OCLV MF3. Here's what it looks like. Here's the apartment building. It's got great aesthetics. It's got great feel. It's got great beauty to it. well thought after. When you walk in this building, you feel it. You feel like you have been and are engaged in a Class A multifamily community. So why invest? Well, we already have a proven project. People always say proof of concept, proof of concept, proof of concept. Fine, I got it. I have Coast, which is 199 units, and it's already 95% occupied. We've leased up in 8 months ahead of schedule. We're already cash flowing. We're working on our refinance right now. We're way ahead of schedule. We already have proof of concept. Demand to live here is high. We have the built-in advantage. I already have all of the team, all of the infrastructure, all of the roads, everything that's there, I've done. And our investors' confidence, returns delivered ahead of schedule, we've already done that. If you're an investor in MF1, you've already gotten checks, you're getting checks. We already know the strong leasing demand is here. I already have a great absorption history and the proven money tree strategy for long-term wealth. If you're already so wealthy that it doesn't matter what happens in the future, I commend you. But there's never been a time when a wealthy person has said to me, how can I pass on generational wealth? Plant the money trees. It just works. Don't spend the money, plant the money trees. Whatever you're spending it on, I don't know. Stop spending it. Invest it. That's me. So F Street, OCLV, MF3, we're at 75% funded. We're filling up fast. We'd love to have you involved. Our fundraising is $6.4 million. If you haven't visited fstreet.com, please do sign up. It's free. We will not spam you with nonsense. It's quality information that gets you to generational wealth and cash flow. We talk about a couple other opportunities while I got you on the line. Thank you for being here. Industrial value add, we just posted this. We've got a great tenant in Precision Zone. We're acquiring this building in Wheeling, Illinois. I've been there. It's pristine. These people do unbelievable work with Precision Zone. It's an industrial electronics and mechanical repair company. They fix electronics. It's unbelievable what they fix with these little motors that basically tell things to go up and down and go right and left, and they break. And this company fixes them. And this place is unbelievable. It's in a really great business park, and it's right by Paul Walker, Chicago Executive Airport. Cash flowing day one, get invested. Get the depreciation. Here's it, 7% preferred return, 100% of the free cash flow. You see the theme here? You get 100% of the free cash flow until you're paid back. In this scenario, then you share 50% and promote shares 50%. This is another money tree. Plant them. Here's the business plan. We're acquiring it. Upon acquisition, we're going to increase the NOI through effective leasing. We got 22,000 square feet of available space to lease. Once we lease that, we're going to knock this out of the park. There's ongoing cash flow from day one. Within 2 years of a new lease, F Street will secure a favorable refinance, and I'll get you all your money back. Imagine that. Put the money in, I go get a signed lease tomorrow, I get you your money back. Voila. You've got a money tree that's officially a full money tree. Through the refinance, we expect to return 50 to 80% of your invested capital. What could be better? You're going to put in 100 grand today. In 2 years, you'll get back 50 or 80,000 dollars of it. You'll continue to get ongoing cash flow. You'll continue to be successful. You'll continue to get the depreciation, and you'll continue to own the asset. Sounds like a winner. We talked a little bit about our private debt fund. In 2024, this fund raised a whopping $30 million. We raised $30 million. We had a goal of $24 million, and we raised $30 million because investors like yourself said, I understand. I get paid 10%. I get paid 1/12 of 10% a month. Simple, easy. I'm in. I want the cash flow. We raised $30 million. We're already off to a start this year of raising $8 million. People love this fund. I started this fund with $700,000, and today we have almost $100 million in it. It's a really simple fund. Here's how it works. Invest 100 grand. Nikes. Sorry, guys. Look at this. I didn't even get it back there. Sorry about that. Oh, hold on. Hold on. Okay, that's it. Invest 100 grand, get back 833 a month. You get a 1099 INT, and your money is locked up for only 1 year. And then after that, it goes to 90 days. It couldn't be better. Immediate liquidity as you need it, 10% return on your money. I've been paying investors for 16 years. Every single month I pay. I pay 1/12 of 10%. So simple. Here's the math right there. Couldn't be easier. It's so simple to understand. Earn your badge. We are a 506C with the Securities and Exchange Commission. This does require you to be accredited by a third party. We have all of this seamlessly integrated into fstreet.com's portal, but since we are advertising and since we do have general solicitation, you are required to invest with us. You have to be accredited. The accreditation process or earning your badge is really simple and it's free. We encourage you to get your badge. And once you do it, it's good for 5 years and you can be an investor. Let's invest together. I'd like to open up to any questions if we have any from the audience. I want to thank you for being here. I hope you can tell my passion for real estate and generational wealth sits right here in every single thing we do at F Street. We are an investor-focused investment group and we grow with investors. What do you got, Peter? So the question is, can F Street help with a 1031? Of course we can. So what we have to do, as you probably understand, is we have to create what's called a TIC, which allows you to come into our investments, whatever you choose to invest into. We create a TIC, or what stands for tenants in common, and you become an owner. MF2 has 2 TIC owners. So yes, of course you can invest. We're sophisticated on the 1031 laws. We can help you. We've got great partners that can also help you. You absolutely should invest and can invest. And the nice thing is, while you might be working in your assets today, you pass the baton to F Street, you can have passive income and relax and enjoy the benefits of your new basis. So I don't remember where in the presentation I said no taxes, but let's talk taxes for a couple minutes for clarity. Thank you for the question. So as an investor, you're considered a passive investor by the government, by the federal authorities that tax you. And so as an investor, when you have passive income, you can only offset that by passive losses, or passive losses only can offset passive income. So the only way that this happens is through what we would call, let's just say you invested $100,000. We will depreciate that to the maximum level we can through a cost segregation study or through a 179D. The challenge happens is that once we reduce this number from $100,000 to 0, I can't go below that. The federal government, as a passive investor, does not let you take additional losses. You're capped at your investment dollars. So we work with you to get your number to have the most amount of passive losses to eventually offset your passive income. It's a phenomenal symphony. This whole symphony takes about 3 years to get from passive loss to passive income. I'm happy to explain that to you. We've done a couple webinars about it, but it's a phenomenal statement. Once you actually get to receive the income and pay 0 tax, passive income offset by passive losses. What I also was referring to on taxes is that the property taxes based on the TIF, or the tax incremental financing, offsets the property taxes. And in this scenario, you get $3.4 million over 19 years to offset our ability to pay taxes on the real estate, which improves and enhances value. And that happens at a various different level. I believe in this case, it's 95% of the increment gets returned back to us to enhance value over 19 years, equaling $3.4 million. I hope that answered your question. Those are great questions. Okay, so the question is, how soon does the tax benefit disappear? So in a cost segregation study, generally we can get up to, it depends on the laws as they're evolving right now, but you can get 40 to 60% of the first year loss happen, and the second year and the third year is when the rest of it usually kicks in. At that point, you're out of losses. So keep investing, because then you can do the next one, helps you continue down the road of creating more passive losses, which eventually gets you to that zero number. The minimum and maximum investment, the minimum investment is $50,000. The maximum, we're interested in talking. If you have a desire to be a material seven-figure investor, we've got various different platforms where those investors participate, and we'd love to talk to you if that's you. So come on and let's talk. So the question is, how do the new tariffs impact construction costs? How does the new deportation, read me that question again, deportation. Got it. How does the immigration deportation impact construction costs? So we work on what they call a GMP contract. So we're already locked in with Stevens on this deal for a GMP contract, and we have no risk to those markets. I remember in COVID, we did have a risk for Coast related to the lumber package. Lumber was skyrocketing. We ended up having to pre-buy, and our number grew 10% before we locked in our GMP related to lumber. And that all was absorbed in that deal before we signed the GMP. In this scenario, we already have our numbers. We're firm and locked in. Our budget's going to be right on schedule, as they all are. Once we're locked in, and we're locked in, and there will be zero implications for budget or timing related to the two items, tariffs and deportations, that you've asked about. Great question. Do our returns require 100% occupancy? And the answer is absolutely not. That would be irresponsible. We do put in vacancy factors, 3.57%. The market in Oak Creek is fluctuating between 3 and 5% right now. And so we use those numbers. You have to allow for a vacancy factor because you have physical occupancy or physical and monetary occupancy, and we manage both of those. But no, our returns always have a vacancy factor in them, and we're happy to share those with you. So the question is, what's a minimum on a 1031 exchange? It's got to be material for you and for us to go through the legal process, right? Our minimum threshold traditionally is $700 to $1 million of net cash into a deal. We brought in a 800 and $2.4 million into MF2. So if you're near there and you want to talk, let's talk. It's hard to speak specifics on a webinar when I don't have enough data. I'm happy to just talk to you offline, and we can have a real discussion about your scenario and how we can help you. No issue. The second question is, what's our leverage point? Summit Credit Union is financing the transaction for us, and we're at 70% leverage. So closing will happen on or before probably the end of April. We can drag out or extend out when the capital is needed for about another 60 days. The question is, what happens if we don't get to 100%? Does the developer put in money? The answer is essentially yes. We've never not gotten to the finish line. We always get there. We have various different means to complete a capital raise, which includes, always includes us as the developer who will just finish off the raise in the event we can't get there. But we're passionate about planting money trees. We're passionate about our investor database. We're passionate about investing, and we always get to the finish line. So I like to say winners win, but we're going to win, and we'll get there, and we'd love to have you part of the team. So the question is, if we're in our 70s, is this an investment for us versus another real estate investment? So that's a really hard question to answer, right? And I say that with genuine lack of knowledge. If you have ample cash flow and you're looking to build legacy real estate for family, right? Meaning I want to make an investment and I want my family, my estate to have these investments, and I don't need immediate cash flow, and I have enough money in my retirement, and I just want to keep investing, and I'm worried about the stock market and its viability going forward, and I don't really love the stress of the ups and downs, and I want to partner with the right people, then yes, of course it is. If the option is you need immediate cash flow, this is definitely not the investment for you, right? You're going to have a preferred return. It's going to be accruing while we're building it. You might want to look at like our private debt fund, or you might want to look at our wheeling asset or other assets that have immediate cash flow that can get spit back to you right away. So you as the investor have to provide us with more information, but those are all really good, deep questions you have to ask yourself. Do you need cash flow today? If the answer is you do, then doing ground up anything is not a good idea. If you want to build value, but you don't need the cash flow, ground up might be the perfect scenario for you. So you have to, if you want to talk offline, I'd love to answer, like to hear more about what you're doing, but I'll give you my opinion always. And I need to know more from you as to where you are and what your financial situation is today with the dollars you choose to invest. And then I'll tell you candidly if it's for you or not. We're going to fill the investment. I want to make sure that you, whoever asked this great question is able to sleep at night. You can't trade in sleep for investment risk, right? So you don't want to make an investment and then be worried about the future or your abilities to pay your bills or live your retired life. You've worked so hard all to these 70 years of your life. This is not the time to create the undue stress, but we'd love to have you involved if it's the right investment for you. So there's two questions. Great. Is what is the business plan? What's the exit plan? So our plan as we model it is to sell the buildings in 4 to 7 years. We projected a 4-year return, which gets you to where you are. We also have a refinance plan in place. So this is a philosophical question that still gets answered. We're building all this community right now, and we're dealing with all accredited investors. The moment I sell the assets, we have to recapture all of the depreciation I've given you high net worth individuals. So if I recapture that, that's going to create a tax obligation for you. And I don't know if that always happens. So we're an entrepreneurial firm. We set out under the benchmarks of pro formas to give you an idea of our solutions and moving forward. It's really hard today, and I'm always marveled by it, but it's really hard today for me to say in 4 years I should sell this asset. Because, excuse me, if interest rates are rising and the world's falling apart, it's probably not the best time to sell an asset. And if you do, you're going to take a loss or reduce your return. So we want to be nimble. We want to have the ability, and you're investing in us and F Street and with Scott and with our team. You're investing in what we're doing. We're going to do what's best for you. And I don't know what best for you is today in 4 years from now. So we do have a model. The model is to sell it, but I can't tell you I'm guaranteed doing that because I really don't know what's going to happen in 4 years. So people say we're selling this thing in 4 years, come hell or high water. Well, I find that to be a little irresponsible. The second question was, how do I, if I'm an investor, sell my individual interest going at some point in the future? And the answer is, this is not the investment for you then. Once you make an investment into an equity project or you become an equity owner into the real estate, trading your shares is very, very difficult, and I do not advise it. I've never had it successfully work out where somebody wanted out and they were able to get out for the market value. I've had people that get out that, I need to sell tomorrow, and I had one individual sell and he took a loss because some other investor bought him out. And that's how it can trade through intercompany or through inter-investors, but it is not the plan of how you want to exit these investments. So if that's your plan and you know you need money in 2 years, excuse me, do not make this investment. Excuse me. Great question. If the tax benefit is good for 19 years, we're getting out after 4, how does that affect us? it improves our resale value. So the other 19 years, the other 15 years goes to benefit the sales price, meaning in the NOI, if we get to an NOI and I have this tax savings, I can put a cap rate on that savings because the new investor is going to buy that value and we get that in sales price. So two good questions. What will be the leverage point on sale? So if you, so we always get, in the marketplace that we're in today, we can get 65 to 70% of value on leverage at any one point. That's on current value. So that happens today. That can also happen in 4 years. So at sale, I think the question is like, how much is going to be paid down, or how much of the amortized debt has the building been paid down? My guess is you're talking about very close to that number, right? If we're going to take a 25-year or 30-year amortization as the final product, and we've paid down 1 or 2 years because we've been stable. So the first 2 years of all construction deals are interest only. Then it might go to an extension of interest only for 1 year, or you might start amortizing in year 3. If we sell it in year 4, we've only paid down 1 year. So we would either have 29 years left of amortization or 24 years left of amortization. So not much would have been paid down by way of debt pay down, but the proceeds would still flow because the value that we're creating is going up. And what was the second? So then the question is, which is a great question, would this be eligible for a 1031? So the answer is, of course. It gets complicated though, and here's what the complication is. You have chosen to invest in MF4. Excuse me, MF3. If MF4 becomes available and you choose that you don't like it because for whatever reason, right? And you want proceeds, it's too hard to make that eligible. So the answer is, it of course would be eligible. It's just very hard under a syndicated real estate transaction for me to force everybody into another transaction. We do, from time to time, do these through our transactions where we'll get everybody's buy-in to do a transaction for the benefit of the tax benefits as well as the step up in basis into the next deal. But we would not expect when we sell this asset to do a 1031 out of it due to the complexities of the challenges moving forward. And down. Yeah, and so Theo, thanks for the question. I don't have the other visual with me, so I can't, I'll get back to you, Theo, and if you could put your email in there, I'll make sure we answer the question for you. The difference, so the returns have moved a little bit, and so as the percentage of ownership has gone more to the Class A to get us to the almost the 18% IRR. That's kind of our threshold of where we want to be on this project. And so we've moved the ownership percentages and manipulated the returns, meaning added an 8% and got higher of preferred return to get you closer to those numbers. I don't really specifically remember the difference between October and today's OM. I'm going to go look at it, and then I'm going to get back to you, Theo, so I can give you an answer as to the technical data points that have modified this return slightly. So Theo referenced in his thing that there is a year 1 projection where income and expenses have stabilized. I just need to look at it in front of me, Theo. I appreciate the question. I'm going to get back to you tomorrow with those answers, if that's okay with you, Theo. I just need to look at it. So the way we look at this is obviously income. We do project rent. Rent has been increasing. I'm assuming at some level those numbers have been updated in the pro forma. Our operating expenses have also been improving at the site and the efficiency. So some of that has improved and resulted in some modifications that I think you're addressing, Theo. But I don't want to be dismissive. I'm just don't have the data point in front of me. and I want to get you your answer because it's a great question and you deserve a good answer. So I'm going to ask if I can just please get back to you tomorrow. I will make sure we get you that answer. Okay, Theo, thank you for the questions. This has been an engaging group. Your questions have been very beneficial, not only for myself, but other people in the audience that have been able to hear and understand your questions. I value your time and I value being here with you today. I know that investing is always an interesting opportunity. Standard investing has shifted dramatically and alternative investings are making a huge run right now. And they're gonna because we can give you transparent questions. If you have a question for GE, you can't call the CEO. But if you have a question about F Street's deal, you can call me or you can come visit the project or you can come to our office. So all of that is amazing and I'm so empowered by your questions and love being here with you today. As I said, my name is Scott Lurie. You can reach out to me, scott@fstreet.com at any time. I'm grateful for you being here. I appreciate the questions. And thank you for considering us as one of your alternative investment opportunities. And we look forward to seeing you on F Street.